What's going on, everyone? We got to take a look at the Nasdaq 100 chart again. Yet another red day. Market's in a pretty bad spot. I'm not going to lie. Now, does it mean that, the world's going to end? We're going to zero? No. But when we're going to come out of this, could be tomorrow, could be next week. It could be a month, 2, 3, 4 months from now. There was some critical level of support that we lost today, and I'm actually going to take off this trend line. But this trend line here, this white line, this goes all the way back to September of 2024, just so you know. I'm going to take it off for the time being here. But the critical area of support that we lost was my linear regression channel, okay? My linear regression channel was tagged once here on the 25th and once here on the 26th. So we got a little bit of a bounce here towards the end of the day. We got a little bit of a bounce here. We kind of closed inside bar yesterday. And today we absolutely destroyed that linear regression line. And I was kind of telling everyone in Evolution Traders, if we get below these previous 2 days range, we're coming down to 20,500. And the only reason is my theory, I believe in stocks are going to go from supply to supply and demand to demand. Okay. So when you lose an area of demand, you tend to gravitate into the next area of demand. Sounds simple, right? Of course it does. It's supposed to sound simple because I'm not a very smart guy. So the more complex we make things and I make things for myself, the more I'm not going to understand. I want to make this as simple as possible for myself to understand so I could just get in on some trade ideas and then fire away. So here's what I'm looking at now. We're coming off of, these 2 days. I'm not going to really call them red days, but, they're essentially red days. But 1, 2, 3, 4, 5, 6 red days in a row without any type of dead cat bounce, really, right? If we have a little bit of a dead cat bounce, here's the scenario. If we open up green tomorrow, like for New York and pre-market is green and we shoot up off the open, I would be cautious. I would be cautious chasing that long into supply. Now, our supply is all the way up here at 21,000. So we do have about 400 points that we could continue to climb. There might be an opportunity to take a little bit of a scalp there, depending on how much we gap up. But I would be cautious as we run into this supply because you could just trickle around and continue to come back down. If we open up red tomorrow or we're flat and we wash out off the New York Open, I would then look for the reversal. Here's my opinion, and it's just an opinion. I think that this market at some point in time between this week and next week at least come down here and test a 200-day moving average. That's 20,332. About 2 or 3 days ago, I made a video and I said if we lost this, we could probably be coming down to the 200. Well, we're pretty much almost there. The area of support that we stopped on is the 150-day simple moving average. We stopped there literally to a T. And we're kind of teeter-tottering right now as we go into the Asian session, London session. We're teeter-tottering. So if we continue to confirm today's lows, 20,323 is only about 250 points away. I could see us getting there, tagging that. That might actually be what needs to happen. Maybe we get a little bit of a flat to green open tomorrow. We get rejected somewhere here at this Bollinger Band around 700, and then we just wash. And truthfully speaking, if you're a bull, you're a buyer, you trade better going long, you might want to just watch that flash into the 200-day moving average and hope that it comes as fast as possible. Because if we sweep this 200-day moving average and then intraday there's a reversal where you get this long wick and you start to bounce, this could probably be the low. Okay, this could be the low. We might consolidate here for a week, but this might be the low where we back test it once more, and then once we break, we don't really see those prices anymore, and we kind of go into Q2 where we are on a turnaround. Here's where things can get a little itchy, right? If we do, do something like this, right, and we lose this 200-day moving average, that's going to create a world of pain for the markets. That's going to put us into a bear market. It will put us into a bear market. So the bulls are coming into a particular area where it's put up or shut up time. Okay. It's put up or shut up time. We need to see something happen here. Again, I'm a day trader. I go long and I go short, but for the sake of the economy, for the sake of our community as traders, things are always better when the price is kind of just grinding higher versus lower. Definitely the shorts, they're very aggressive. They're very violent. You can definitely make fast money. You can definitely make a lot of money, but they're more risky. They, you know, we tend to not trust them as much. And, you know, all in all, people are just more gloom, doom, June when we're going down, right? It's just everyone has a smile on their face when we're kind of just grinding higher, right? When we're just grinding higher, everyone has a smile on their face. When we're doing these big, nasty flushes, people are getting liquidated. You know, people are blowing accounts. It's just not a fun time. You know, one day you make $3,000, the next day you try to do it again, you get caught, and then you lose your account. It's just very difficult. So that's my analysis. That's what I'm looking at. If we open up flat to green tomorrow, again, I'm keeping this level in mind here. If I do take a long scalp, it's got to be very quick, and I want to be out because I'm expecting probably like what happened today, where you kind of come up and you test a little bit of a overnight high, and then you kind of just fade out. And I would like to see the fade happen fast. I would like to see the fade happen aggressively. And then I would like to lose it and then reclaim it right away. And tomorrow's Friday. And what better day than to go into next week with a quick loss of the 200-day moving average and then an immediate big reversal. That could tell us that we're on our way for a bounce, okay? If we don't get that, look out. Now, if we gap down, look for the same kind of scenario, but don't chase the short here. Let's see if we can lose that and then reclaim it and then back test and hold and then look to see if you can find that long. Okay, that's how I'm going to play the situation for tomorrow. I'll see all of you guys on the next video. Again, stay safe out there, guys. You know, don't do anything stupid. Again, just protect yourself. You need to make sure that you have capital to continue to trade, because that's how we make money. Without capital, you cannot trade. I'll see all of you guys on the next video.